Hey everyone, welcome back to Poplar Preparedness. I'm going to be discussing why I think the stock market is about to crash. I know recently it has popped significantly up. I even kind of told you last week that the most likely thing was for it to pop up. That's what I was leaning towards. However, this pop up is starting to run out of steam and is running out of energy, and there is the most likely possibility that this will drop very rapidly, very fast, and as they say in parlance, rip your face off. All right, so first off, let's just say this right out front. This is not investment advice. If you want investment advice, go pay an investment advisor. I am required to say that so you don't sue me for making dumb choices on the market. This is my understanding of how things are working. I'm talking about the markets in general. If you want to see how this should play out in actual trades and everything like that, you should talk to your advisor. I'm not going to be recommending specific trades to you, and even if you were to pay me, I wouldn't be allowed to do that anyway under U.S. law. All right, with that said, as someone who tends to get things a little more right than wrong, at least recently, let's just look at things, okay? We have a stock market that's supposed to be pricing in the future. And some people say, well, it's already priced in all this downturn in the economy. No, the stock market has priced in the Federal Reserve and other banks out there cutting interest rates by the end of the year. Now, they've started to, quote-unquote, reprice that, but stocks have been screaming higher. Even so, they haven't fully priced in the lowering of expectations of earnings for companies. Companies are making less money now, and they're planning on, they're projecting that they'll be losing more money over the course of this next year, but a lot of those companies have not lowered their earnings projections yet. When they lower those earning projections, you should expect that to hit the bottom line here. Now, the market has been so dependent upon the Federal Reserve printing money, and the Federal Reserve isn't printing money. In fact, they're actually pulling money out of the system. So if you're thinking that the Federal Reserve is going to blast this stock market to new heights, you got another thing coming. The Federal Reserve speakers just this week were reiterating that, no, we're going to keep hiking the interest rates because we need to get inflation under control. Inflation is bad for stocks because the companies make less money. Federal Reserve hiking interest rates, that's bad for stocks. Companies making less money, that's bad for stocks. And then we're not even taking into account any geopolitical events that could happen over the next weeks between Taiwan and anyone else, and what's happening over in Europe, and what's happening now in the Balkans between Kosovo and Serbia, if you've been tracking any of that. Also, we have more of a showdown happening in the Middle East, too, between Iran and Israel and the other Gulf states. We have major sanctions being slapped back on Iran, and penalties being put on there as well by the United States. We got a lot of unrest and unsettledness happening around the world. Is there a chance that there's going to be any kind of geopolitical shock to the system? And the answer is absolutely. We have more and more countries refusing to trade with each other, and yet we are priced to the hilt as if China is going to continue exporting everything that America and the West wants with no hiccups whatsoever, and yet there's this spat happening right now where American warships are staring down the flight decks at Chinese warships' flight decks, and we have this blockade happening over in Taiwan where a lot of the semiconductors are made for the world. A lot of computer chips are made there. Korea is just sitting back going like, we don't want any part of this right now. Where a lot more manufacturing happens, they're pretty darn close to China. We have a dispute of epic proportions happening in one of the most busy trade routes in the world. That is kind of something that you would expect to see the stock market reacting to, and in fact, right now it is reacting like this, straight up. If you think that's going to continue, I have another thing coming for you. Folks, there is a high probability. I don't have a crystal ball, so this is me just... It's running out of steam. As soon as enough bag holders buy in this is probably going to start dropping through the floor again. This spike has happened in part because there were so many people short the market that when it started going up, those people had to start covering, and they started buying into the spike, and that is a short covering spike. But people have lost a lot of those, have closed out a lot of those short positions, and we are now in a place where that isn't as much of a market mover right now. So people are going to be getting back to what are the fundamentals, and should the stock market be priced here or should it be lower? And the answer for most people, most banks, most everyone out there is, it probably should be going down. Most banks are calling out and saying that we have not yet hit a market bottom for this bear market. Okay, so with all that said, expect it to start going down again. So if you have a whole bunch of money right now, this might be a good exit point to get your money out of the market. I don't know what's going to happen today. I'm recording this the day before, so this will be dropping at 6:15 a.m. like my morning videos usually do. So this will give you a little bit of time before the market gets going. But it may go up today again, but expect it to start going down again. If you're into silver and gold, which is a wise place to be, realize that as the market goes down, silver and gold have a tendency to go down, at least initially at first as well. And we're seeing that again, so just hold on to your coins, know it's real money, and don't get shaken out of it. Stocks, those stocks can keep dropping in price and value because inherently they are significantly overpriced. The price to earnings ratios are off the charts right now. And as those earnings start to drop, those forward earnings start dropping faster, that means those ratios are going to start spiraling upwards to ridiculous levels. And sooner or later, the stock market is going to correct downward to bring those price to earnings, and price to forward earnings is basically how expensive is a stock to how much money is that company going to make in the future or currently making. And that's where we see basically those investments should be. You want to put $1 into a stock that's going to generate 25 cents, 50 cents worth of revenue for you this year. That would be great. That's a PE of 4 or PE to 5. I said, no, sorry, 2 or 4. But when we start having PEs of 16, 30, 100, or infinite because they're not actually making any money, that's when you start being like, this is a little overpriced. And the tech stocks are particularly overpriced. So folks, please make some smart choices out there. Defend yourself. If you have any, if what I've said piques your concern or interest about investments that you have, talk to an investment advisor about that, and stick to your guns and really press them on what it will look like for this market to go down further and how you should protect yourself from that. Again, this is not investment advice. This is your friendly Steve Poplar talking shop with you. I am an accountant, but I am a tax accountant. I see the effects of people trading stocks, and usually it's not all that great. If you've made money, it might be a good idea to take some of that money off the table, is my only thought on that matter. All right, folks, if you like this video, you might want to check out this video right here. Otherwise, I will see you later. Steve Poplar, out.